as we go to our topic of the day of whether the investment is on track to reach 2023 target. Investment realization in Indonesia has been quite encouraging lately, although the world foreign direct investment flows have yet fully recovered. According to the latest report from the Investment Ministry, the Coordinating Investment Board or BKPM, the investment realization during the first semester almost reached a half of this year's target of 1,400 trillion rupiah or about 93.25 billion US dollars.
The Investment Ministry, the Coordinating Investment Board or BKPM, reported recently that the investment realization during the first semester of 2023 reached a total of 78.7 trillion rupiah, up 16% year-on-year. Meanwhile, in the second quarter of 2023, investment realization amounted to 349.8 trillion rupiah, an increase of 15.7% on an annual basis. Investment realization during the first semester accounted for 48.5% of the investment target of 1,400 trillion rupiah, or about 93.25 billion US dollars. As for 2022, investment realization reached 1,207 trillion rupiah, exceeding the target of 1,200 trillion rupiah. Investments recorded by BKPM do not include investments made for upstream oil and gas activities and the financial sector. During the first 6 months, foreign investment amounted to 363.3 trillion rupiah, or 53.5% of the total investment realization. Meanwhile, domestic investment reached 315.4 trillion rupiah, or 46.5%. Speaking at a press conference on June 21, 2023, the Minister of Investment, head of the Investment Coordinating Board or BKPM, Bahlil Lahadalia, said he was quite optimistic that this year's investment target could be achieved because the realization in the first 6 months had almost reached 50% of the target. During the first semester, the investment flows to regions outside Java also continues to increase, in line with the increase in the construction of mineral processing facilities in eastern Indonesia. BKPM recorded that a total investment realization outside Java reached 354.9 trillion rupiah, or 52.3% of the total realized investment in the country. The investment in regions outside Java has begun to dominate the investment flows in the country since the government began to ban nickel ore export in January 2020 and asked them to process their ore production in local processing plants. Since June this year, the government has also banned exports of bauxite ore. The export ban has also prompted miners to process their bauxite ores in local processing plants. Shifting investment to outside Java is one of the government's important programs in reducing economic growth disparities. In addition to providing investment incentives to remote areas, the government has also opened a number of special economic zones in a number of regions in order to promote equal development. As of 2022, there are 19 special economic zones, of which 12 are in operation and the remainder in the construction phase. 8 are designated for tourism, with the rest for manufacturing and processing. However, the 5 provinces with the largest amounts investments are still mostly located in Java. During the first semester, the top 5 investment recipients are West Java with 53.7 trillion rupiah, Jakarta with 43 trillion rupiah, East Java with 31.1 trillion rupiah, Central Sulawesi with 26.6 trillion rupiah, and Banten with 24.9 trillion rupiah. In the first half of 2023, investors tended to invest in capital and technology-intensive sectors. The 5 capital-intensive sectors are the basic metal industry, metal goods, non-machinery and equipment, comprised of 89 trillion rupiah, transportation building and telecommunications with 79.1 trillion rupiah, mining industry with 71.4 trillion rupiah, housing, industrial and office areas with 58.3 trillion rupiah, and chemical and pharmaceutical sectors with 48.1 trillion rupiah. The government still needs to issue policies that encourage the growth of the labor-intensive sector, as the capital and technology-intensive industries will not provide a lot of jobs for the country's large workforces. Also, at the same time, the government should introduce more incentives to further encourage investors to do business outside Java. Such a policy is needed in order to reduce economic growth disparities between developed Java Island and other regions in the country.
Investment realization during the first semester has been quite encouraging, as it has almost reached a half of this year's target of 1,400 trillion rupiah. Investment flows outside Java has exceeded 50%, but it may be still too low to reduce growth disparities in the country. Here with us this afternoon, our guest Andry Satrio Nugroho is the head of Center of Industry, Trade and Investment at INDEF. Pak Andry will discuss with us through a live Zoom the investment trend and on the need to further push investment outside Java in order to reduce growth disparities. Good afternoon, Pak Andry.
Good afternoon, Mbak Luisa. Good to see you.
Right, good to see you too, Pak Andry. Pak Andry, the investment realization in this first trimester of this year has almost reached this year's target, which is 1,400 trillion rupiah. Some people are worried that the global uncertainty as well as the 2024 elections will disrupt our investment flows. In your opinion, Pak Andry, with such a scenario, is this year's investment target will be achieved or not?
Yes, indeed, achieving our investment target for the year is within our reach, I think, but it's crucial to underscore that this isn't without its set of distinct considerations. For example, like elections, especially presidential ones, can significantly influence investment decisions. So this influence is largely driven by investors' need to stability. So robust political and legal infrastructure can provide this assurance. So over the years, we are lucky that Indonesia's political environment during elections years has not significantly influenced investment trends. This is evidence from the FDI data back in 2018. FDI was at 20.5 billion US dollar. And it increased by a noteworthy 60% to $23.8 billion in 2019, which is a politically significant year. So these figures underscore the resilience of our investor confidence in Indonesia. So one possibly reason behind the resilience is that unlike the US, political parties in Indonesia have less extreme variance in their views. So most have a shared vision for the country, despite the political uncertainties often associated with election years. I think investors view Indonesia as more stable and less prone to dramatic shift. But however, it's essential to recognize a pattern among investors. So a cautious wait-and-see approach, particularly in sectors such as agriculture, plantation, and manufacturing. So these sectors experienced a downturn in investment in 2019. As we approach 2024, as it's crucial, I think, to keep a close eye on these sectors to preclude potential and investment decline. So, Mbak Luisa, beyond political stability, certainty in profitability is another crucial factor influencing investment decisions. So investors need assurance that their investment not only secure, but also has the potential for substantial returns. So the second aspect is relates to the return in investment. So high potential ROI and manageable risks are more likely to attract investment. So conversely, low potential ROI or high risk may deter investors. Noticing the global economic landscape, as you mentioned, it's disconcerting to identify a resurgence or slowdown, especially in China. The downturn is a China problem. It's ripple effect influencing economics worldwide. So I think investors are cautiously diversifying their ASEAN portfolio, driven by the escalating uncertainties associated with China since 2020. So the present situation, I think, opens up the opportunities for Indonesia. So Indonesia could emerge as an appealing alternative. But however, it's essential Indonesia to respond, I think, effectively to this shift. So a failure to capitalize on this opportunity, right, could result a missed chance for our economic advancement. So in this context, I think it's really crucial to ensure the prospective investor a sense of certainty and predictability, a stable economic and political environment paired with lucrative and low risk investment opportunities. I think will boost investor confidence. So this confidence, I think, in turn promotes more investment activity in Indonesia.
We take note on that, Pak Andry. Now, according to BKPM, a large part of investment realization in the first semester consists of capital as well as technology-intensive industries. Do you think it indicates that there is a change in the investment trend from labor now to capital and technology industry?
Yeah. So one of the primary challenges encountered by our industries, particularly in processing of raw commodities, is the lack of advanced technology and adequate capital. So this often leads to the outright export of these commodities, so bypassing the value addition stage that could otherwise take place domestically in Indonesia. So the government's current strategy is centered on downstream processing. The implementation of this strategy, I think, could substantially increase the value of our export and fortify the national economy. Yet, this strategic pivot depends on the influx of foreign investment, as we mentioned, which will introduce much needed technological innovation and capital research in Indonesia. So as a result, the demand for labor, especially unskilled, has been declining, while the requirement for the technological provision and skilled worker has surged. So indeed, the past decade has seen a worrisome trend in foreign direct investment in Indonesia. So once our workforce benefit from an absorption rate 60% through FDI, regrettably, this figure has nosedived to a mere 50% today, signaling like a concerning shift in the investment patterns. So traditionally, FDI targeted labor-intensive primary sectors in Indonesia, creating significant employment opportunities. But in a stark contrast today, I think FDIs gravitate towards capital intensive in secondary and tertiary or services sector. I think this shift, unfortunately minimize job creation for our local workforce, so making a critical challenge for Indonesian labor market. So we learn from this shift an insightful correlation surface that as FDI increase, the absorption in Indonesia labor decreased correspondingly. So this correlation illustrates two critical points. First, FDIs are increasingly capital intensive, so requiring less human labor. Second, there exists a significantly disparity between the availability of skilled labor and the industrial requirement in Indonesia. So there be creating a critical gap in our labor market. So this is one of the important things that we have to look. This underscores the urgency for strategic initiative to bridge the skills gap, promote technological transfer, and ensure that FDIs contribute positively to Indonesian economic and labor market.
Pak Andry, now let's talk about the investment flows outside of Java that it has begun to exceed 50% since the year of 2001. But until now, this portion still remains at 52% of the total. Do you think that such a composition is still too low to reduce growth disparity in the country?
So I think while it's great that the government is encouraging more investment outside of Java, making up about 52% of all investments. It's not just about how much money is invested. We need to look at what these investments actually do for the local area. So one issues we're seeing in Eastern Indonesia is that these investment aren't creating many jobs for local people. So this is mainly because the skills the local workforce have don't match what these new industries need. So as a result, companies are bringing in workers from Java or even from overseas. So this means local people miss out job opportunities. So another concern is the impact this investment are having on the environment. Some industries cause a lot of pollution, waste, and which can hurt local job in traditional jobs like fishing and farming, for example. If a factory pollutes the sea, so then there might be fewer fish for local fishermen to catch. So this is what known as a negative spillover effect. So given the issues, I believe the government should try to attract investment that are good for environment, good for society, and I think manage in a responsible way. And these are what we call the environmental, social, and governance principles. So by focusing on these principles, I think we can ensure that investment, especially in outside Java, help the local community in the long run. But
Pak Andry, last question before we move on. So what breakthrough or perhaps what policies can the government need to establish to further push investment outside Java in order to ensure there is equal development?
Yeah, I think first we look at the investment performance in non-Java regions. It's really quite good right now. What I mentioned before is the quality. We can increase the quality of the investment outside the Java, and it's really crucial to contemplate like the implementation of incentives based on geographical distance. So the farther the location of the investment, I think the more significant the incentive should be. So this tactic, this strategy could potentially attract and engage investors to the region of Eastern Indonesia. So, but however, I think let's not forget that such incentives like that might not deliver their full potential if we don't confront the fundamental issues inherent in this location. So we need to improve fundamental facilities like logistic infrastructure, including reducing associated logistic costs. At the same time, maintaining energy costs at the competitive level is really essential, as is ensuring the availability of raw materials in these regions, right? Ultimately, I think the crucial aspect of enhancing the capabilities of our human resource should be addressed. So fostering a skilled workforce that will truly reap the benefit from this foreign investment is really important.
Andry Satrio Nugroho, Head of Center of Industry, Trade and Investment, INDEF. Thank you so much for sharing your insights with us on Economic Outlook today.
Thank you for having me, Mbak.